I effed up. Bigly. I think I'll just start with where this all started. So back on July 11th, we started noticing that the market was peaking out. In fact, we had multiple hour-long, sometimes even 90-minute long course member live streams, and we're like, this is weird. What's going on? You could see it right here, July 11th. That was the day the NASDAQ was down 2%. And we were at the top of the market, mind you. The NASDAQ just hit like 505. So we do a course member live stream. We're like, this is weird. If this trend continues, it's going to make sense to go bearish. And right around this time, I'm like, maybe like a 5.5 to like a 7 on the bull bear scale. We're like, okay, like we're a little toppy here, but we're more bullish than we're bearish, 10 being very bullish, but we're not going to go into margin. We're going to take it easy. Maybe the upside's another 10% in the market or whatever. And then we noticed, we got a little more bearish. We got some more information over the last few weeks here, got a little more bearish and made some money on puts. But I had this thesis going into this week that if we got good news, the market would resume a rally. That we've had a little bit of a 10% correction here, and that's it. Well, as long as we have good earnings, we will have a rally. And so going into this week, I had bearish options. I was bearish going into this week because of this trend that's been going on since July 11th. In fact, I think the Nike swoosh died on July 11th. The Nike swoosh is something that we've been talking about since November of 2022. In fact, I launched a fund in November of 22. And I drew this blue line and I said, I think we're going straight up. There'll be some volatility, but I think we're going straight up. And now we can see the swoosh. There it is. When we were here, everybody thought I was insane. Everybody thought, no way, Kevin, we're going to have an inverse Nike swoosh. It's going to be upside down. Well, whatever. I launched a fund over here, and the timing was great. This doesn't mean I'm right about everything I do. I screwed up, over the last couple days, and I'm going to explain to you why. So I'm not here to tell you that I'm right all the time. I'm not. I'm going to tell you how badly I was wrong in just a moment. So my thesis was, okay, go bearish into July 31st, the week of July 31st, basically, because we've got Powell. I don't think he's going to tee up a rate cut, and I think there's a risk that earnings are bad and things are going to sell off. So then what happened? J-Pow tees up a rate cut. I'm like, oh, that's really bullish. And earnings come in really good. I'm like, oh, this is fantastic. Okay. Then Kevin was wrong. Then we were wrong to be bearish is what I told myself. So I doubted the bearish thesis that we started building July 11th, right? So Kevin goes bearish July 11th. People are like, oh, you're a flip-flopper. I'm like, no, actually, investable cash is at record lows. Inflation is solved, but that's going to lead to bad earnings because revenue will come in lower. We're going to be fighting deflation sooner rather than later. That could lead to layoffs. AI is useful at making things better quality, but not profitable, which means if we go into a stock market correction, CapEx spending will get slashed, and then the chips will really plummet. And I also have been saying, hey, I don't know about this whole, small cap trade because, and I've been saying this since July 11th, if you go into small caps, you're increasing your exposure to things that do horribly in a recession. Like small caps collapse and go bankrupt in a recession. So then, we go into this week, we get a more bullish Powell and a more bullish, earnings set. And how do I screw up? Keep in mind, you could watch all my screw-ups. I don't guarantee you could make money, but you could watch my screw-ups or my successes in the courses on building your wealth. We're going to extend the coupon a couple days here to Friday, just to get, if you want to witness all my screwing up, but you want to hear my long version of these explanations as we find these things out. Like when we're talking about this stuff on July 11th, if you want to be there and you want to see the archive, or going forward, every day we do these live streams, we break down a market thesis. Here's what we're seeing. Here maybe where the trades are. Here's where we could be wrong. Make sure you're part of those. But anyway, your boy Kevin decided, okay, well, earnings are better than expected. Powell's better than expected, better than we could have asked for. Maybe it's time to go bullish on some call options for Friday because we should see a rally this week. So in other words, we made some money on puts going in, took some profits on those, and let's make some money on now the flip up, right? So you made money on the correction, let's make money on the flip up. Unfortunately, we didn't get a flip up. We got a continuation of a flip down. And then I lost money. Where's my sound effect? Oh, it's not on right now. I was going to play your boy Kevin just lost lots of money, which is sad. But what matters not is losing money in a trade, because basically I bet that I was wrong about being bearish, but I was right to be bearish. And so I didn't listen to myself again. And then I lost money, which is bad, but whatever. The point is, the real question, what matters now, is what happens going forward. And this is what we spent about an hour and a half on this morning. I think it was an hour and a half. I'll look. We spent a lot of time on this morning in the course member live stream analyzing what is next. And I'm not going to go through everything in detail here, but I'm going to give you a preview. Yeah, we had a course member live stream this morning. It was probably one of the more important live streams because we really laid out a thesis and how to play it. We had over 2,000 watchers already. It just said, oh, it's only 52 minutes today. Okay, that's fine. It felt longer. But anyway, over 2,000 people in it already. And I'm sure more people watch it as well just because I think it's a very important one. I think it was yesterday's live stream, course member live stream with 3,400 people. Who watched yesterday's course member live. But whatever. Point is that being wrong happens. Being wrong bigly also happens. That's part of trading. You get big wins, big losses. You hope you net up, right? But the real question now is, what happens between now and the election? And what we have are valuations still stretchy. AI profitability is going to be years away. We know that. So CapEx spending could be on the chopping block if there's a market correction. You have election pricings. Like when we price in an election, we generally have increased volatility. We generally have a bearish market. You have investable cash per BCA research that's at record lows. We have not been at these low levels of investable cash. Investable cash is different than just looking at, oh, well, how much money is available in money market funds? Okay, well, money available in money market funds does not mean all that money is instantaneously available for, deploying into the stock market. That could be money that's sitting at banks. It could be money that's sitting at mega caps as, a cash equivalent. Doesn't mean they're going to buy a stock. They could do buybacks from that, but that's not necessarily the truth. And so what appears to be happening is markets are convinced that inflation is no longer an issue. And unfortunately, now what we're doing is we're starting to play out the beginning of what happens when the yield curve inverts. When the yield curve goes as deep into inversion as it did this time, it has always foreshadowed a recession. If we don't have a recession by the time of the election, I think we can rally. But if the market continues to sell down going into the election for the next 3 months, I think, no guarantees, not personalized advice, but I think you'll make a lot of money going short or going long certain, like inverse trades, right? And I realize, people are like, oh, you're just bearish because today's, a red date. No, I don't really care. Like the NASDAQ being down 1.4%. Who cares? What matters is this right here. That NASDAQ, should we start pricing in a recession, will easily go to 435. Will easily go probably past that. I think easy is 435. Likely, I think, is 400. I don't know if we're going to get much past 400, but for the good news we got from Powell and the good news we got from earnings to lead to this sell-off, the market is going risk off. And I think while we are 3 weeks into it, and I wish I never doubted my bearish thesis, I think it's unfortunately going to get a lot worse. Now, I don't think I want to make too many market update videos, so this might be my last one in a while, and we'll just stick to talking about them in the course member live. There are a lot of political things I need to cover. There are geopolitical risks going on. There's retaliation coming from Iran. These could be contributing to a market sell-off as well. But usually geopolitical events are a buy the dip event. So I'm just going to put this thesis out here. And I'm going to make this crystal clear. I think the Nike swoosh has died. I think between now and the election, the Nike swoosh is dead. Almost with certainty. Again, I could be wrong. I can't make guarantees. But I think the Nike swoosh is dead with almost certainty between now and the election. If we are not in a recession by the time of the election, the Nike swoosh may come back. But if we are in a recession by the time of the election, you won't want to buy anything until the Federal Reserve not only cuts rates to zero, but starts infinite money printing again. So I'm just going to keep my market commentary and exactly what trades I'm making to position to this to my course members. I'm going to continue to honor my course members. I made them a promise. I said, listen, I made them the following promises. I said, I will never give up. I will be here every day, mostly every day. Sometimes I'm off when I'm traveling, but I will be here every day. The easiest thing I could do is just give up and disappear and retire. That's not me, though. I will be here every day, and I will keep trying. I can't promise that I'm going to be right on every trade, and some trades I get absolutely hosed on. That's just part of trading. But I'm going to give you my value every single day. I'm gonna do my best for you, and I'll always tell you how I feel. I'm going to adapt to the market. Unfortunately, I think this 3-week trend that we've had is just an appetizer of what's coming. It's an appetizer. So I'm not happy. And I mean that for everything. Tesla, not happy. Bitcoin, I'm not happy. The worst thing, the stupidest trade to get into right now is IWM. It's the stupidest thing to do. That doesn't mean I don't do stupid things. Sometimes I do things and I'm like, well, why did I do that? You know? Generally, the trades you lose lots of money on. You're like, man, what are you thinking? But a lot of people, I would say the vast majority of people who join my courses, they join, yes, they want the trade alerts. They want to see what I'm thinking. They don't copy them. You should never you should never copy me. You should take the inspiration of what's Kevin seeing as this trend, and do I agree with this? Look at this. I put this on Twitter on July 25th. And I think it will continue to be true. What I wrote is, this was when the IWM was like 225. Sorry, Tom Lee, rotating into small caps just as the recession risks rise is fully... I shouldn't have said that word. I apologize, but I did. I'm not trying to hide it. It's because I think it's a very, very bad idea to expose yourself to small caps that have the greatest recession risk. There are some that I think are okay. Like, I think Ubiquity is a very, very strong small cap, but I'm biased on that. You know, I'm exposed to that one. But what I do think people should do is consider increasing cash, make more money, insulate your job, get more skills, get more licenses, reduce expenses, limit debt, and be safe out there, okay? I love y'all. I wish you the best. I don't want to go into a recession. Recessions are very, very painful, and they're very, very bad. But the Nike swoosh between now and the election is dead. Anyway, we extended that coupon code until Friday, so another, 48 hours here. If you want to check it out, you can be part of those course member live streams, play them back on 2x, whatever you want. I think they're extremely valuable, and I wish you the best. Goodbye and good luck. MeetKevin.com.
These things that you told us here, I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.